on here. Let's show it to you guys on an actual chart. Now again, we want to remember how or where does liquidity lie above highs and below lows. How do we identify a high in the market, a move up, then a move down? How do we identify a low in the market, a move down, then a move up? Okay, it's not a move down, then a move down. Believe it or not, some people, the brain cells on them, there's not many left after watching TikTok, okay? It's very, very little left. And they think a move down and then a move down is a low. No, Timmy, we need to move up because it causes the peaks and the valleys, okay, buddy? We'll just do this super quick and I'll show you guys examples of this happening in real time, okay? Let's do an example right here, okay? We have a high right here, okay? Move up, then a move down, the highest point of those two candlesticks, awesome. We mark it out with a little line. Now, obviously, this is cherry picked because I'm getting on the charts and I'm identifying like obviously price reversed off of this, but it's proving the point here. So look, okay, we have a high and then awesome, we're in an uptrend, right? We have a high, then a low, then a high, then a higher low, and then a higher high, but oh no, we're gonna reverse off of that. Why? Because a lot of people were pressing buy when these highs got pushed above, okay? And then a lot of people who were selling on this move down, where's their invalidation point? Above these highs. What does that give the market makers the opportunity to do? Fill all of their sell orders right here and say, fuck you to the sellers, and then say, fuck you to the buyers. We're stopping out both of you guys today, and we're the only ones making money. And that's why liquidity is so important, because it's all just off of manipulation. Let me show you guys another example and just prove to you guys that liquidity, it's a real thing, okay? Let's see here. I mean, it happens on every single time frame. It's literally as simple as this right here. Like this just happened in the market, okay? We get a big move down. Oh my gosh, we're in a downtrend. Look, all of these people, we see this big move down, okay? Drake's dick is on the screen with this candlestick. Boom, we get a break of structure to the downside. Holy shit, we're gonna go lower. And then, okay, we have a low right here. And then, oh, what do we see? The market goes down. Oh, we push past this low. All the idiots, what are they doing? They're pressing sell. And then also all the people that thought they were geniuses, when they see this big move down, they're like, oh yeah, dude, price isn't gonna move any lower. You're right, price probably isn't going to move any lower, but you're still dumb. Why are they dumb? Because liquidity hasn't been swept yet. How is price going to move higher if the market makers haven't even been able to fill their orders? How are they going to have to fill their orders? They have to generate a low and then they have to sweep out the low to push price higher. This just happened in real fucking time. And actually I made a significant amount of money on this move up today. So again, there's the people that say, holy shit, Drake's dick is on the screen. I'm gonna press sell when we push underneath this low because that's confirming that the downtrend is continuing. Idiots. Boom, you guys are getting stopped out. And then also the people that were pressing buy on this candlestick, they're also idiots. They're getting stopped out because the orders haven't been filled yet. Where do the orders get filled? For the buy positions, down here, and then boom, price ends up moving higher. It's like fucking clockwork, and it shows up on every single time frame. Now, I'm going to show you guys or tell you guys the best time frames and opportunities to use liquidity sweeps, because it's one thing to see a liquidity sweep happening in real time or to be able to identify it on the chart. Like I can go here and I can show you a million freaking liquidity sweeps, like, right? Okay, boom, price comes underneath this low, sweeps liquidity, awesome. We move higher off of that. Price comes up, sweeps out this high, boom, Drake's dick is on the screen. Okay, we see price come down right here, sweep out these lows, awesome, we move higher. We see price dump down, sweep out these lows right here, awesome, price moves higher. Okay, liquidity sweeps are on every single time frame. Price moves up, sweeps out these highs, moves lower. It's how the market moves, okay? I can show it to you guys on the weekly time frame, I can show it to you guys on the daily time frame, I can show it to you guys on the 1 minute time frame. Okay, this is a monthly liquidity sweep. What are we in? We're in a freaking uptrend, okay? And then, flash crash, we come down, we sweep out this monthly low, we sweep out this monthly low, and then what do you fucking know? It gives all the richest people in the world the best opportunity to invest in their good old-fashioned S&P 500, and next thing you know, they're up 50% on their portfolio for the year, okay? This is how the big people make their money, okay? By identifying lows and highs in the market, okay? And capitalizing on it because of liquidity, okay? Now, the best time frames, or at least for the way that I trade, to be able to identify liquidity on, for me, is going to be the 4 hour and the 1 hour. Now, why is this important? Because I'm trading market open at 9:30 a.m. Eastern time every single day. And for the most part, when new money comes into the market, or every single time that market opens, there's new money coming into the market. So how is that new money going to move the market? It needs